Hi and welcome. So today we're going to be speaking to Fred Browne, who's CEO of Aergo Capital. Hi Fred, just wondered if we could just kick off the conversation, if you could explain a bit more about Aergo and kind of your experiences over the last year.
Hi Victoria, thanks for having me on today. Yeah, basically, look, as you know, Aergo was set up almost 22 years ago. I'm CEO. One of the key milestones, just to kind of, because I know this is a fairly short interview, one of the big developments was in 2014 when Carval investors basically took a majority share in Aergo, and the idea there was to transition into kind of a newer, more modern fleet. So today, the Aergo's current fleet, a mix of narrow body, wide body, and turboprops, we have an average of 8.2 years and a lease term remaining of 6 years. We've kind of split it between two portfolios. It's on balance sheet. We have we have 114 aircraft with a value of $2 billion. And we set up an aircraft asset management business. David Parr from Aviation, ex-CEO, joined about a year ago, and he's rapidly built up an asset management portfolio on behalf of third parties of around 80 aircraft with a value of over $2 billion. So basically, combined portfolio of 194 assets with a value of $4 billion. So, and it's basically, it's broken down 43% narrow body, 37% wide body, 20% turboprop. We've grown to 42 employees between Dublin, New York, London, Hong Kong, and Nairobi. So the key takeaway here is that we at the beginning of the pandemic, we were actually quite aircraft light. We'd sold down a lot of our portfolio from about 80 aircraft to 40 aircraft between 2017 and 2000, just before the pandemic, just because we thought the market was getting too hot. We obviously didn't see the pandemic coming, but we were in pretty good shape when going into it. So, apart from the first 6 months, which were pretty, uncertain for everybody, we realized it was a good buying opportunity. So we basically went from 40 aircraft to just under 200 aircraft during the pandemic, which of course we're not out of yet, but it's been a huge growth period for Aergo.
Yeah, absolutely. I mean, that's a terrific growth. Clearly, you've seen opportunities in the market despite the distress. I was just wondering kind of what's your expectations for the future recovery of the market, and do you see even more opportunities coming for Aergo?
Well, look, I mean, I think it's been, it's been, I guess for everybody, it's been disappointing that we now have a new variant rampaging around the place, and it's obviously taken the edge off the recovery. I mean, I think things were coming back nicely, and taking place like the US, Europe, some parts of Asia, we're beginning to show some life again. So I think this latest outbreak is probably going to set us back another 3 to 6 months. But I think I'd be very optimistic, in fact, that eventually, this will peter out, and there'll be pretty much, in my view, a V-shaped recovery.
So just speaking more about leasing then, I mean, it seems to have been a little bit of a lifeline, hasn't it, for some of the airlines? I mean, how do you see the leasing market developing? Do you think there's more of a longer term shift to it having a more significant role as a source of financing for airlines?
Well, I mean, without giving away my age, when I joined Guinness Speed Aviation in 1985, I mean, the market was around 3% of the whole market was through operating leases. Now we're well over 50%, and I think that's definitely is going to be the way forward. I think we've seen how this pandemic in particular has decimated airlines' balance sheets and cash flows. I think that interesting enough, one of the observations I took away from this, if you go back in history, I can remember in the first Gulf War, there were the top 10 lessors. 9 of them were wiped out in the in that particular Gulf War. The only one that survived was ILFC. So this time round, there's been huge resilience and robustness from the lessors, and I think that's reflected in the fact that they're so much stronger, and the shareholders behind them are so much stronger. And if you look at the top 15, 20, they've all got huge kind of institutional money behind them. So I think, yeah, definitely operating lease here to stay, and I think my view, it's going to be in the kind of 60% range over the next 5 years, I predict.
Yeah, absolutely. I think that's a trend that most people are seeing as well. And what about the competitive environment though? I mean, the leasing market before the pandemic was very hot, lease rate expectations were very low. What kind of trends have you been seeing post-pandemic, and what's been happening in the competitive market in regards to lease rate factors and pricing?
Well, I found again very interesting the fact that we are in probably one of the worst sort of downturns in the history of aviation, and certainly in the last 6 to 12 months, I've been very surprised at the rapid recovery of investors coming into the market. So, which of course has put pretty serious pressure on deals like for example, say leasebacks. We're seeing incredibly tight margins for particularly for the good credits. So it's kind of counterintuitive that we're seeing such very tight returns in a market that's pretty uncertain, to be honest, going forward. So I think that's mainstream stuff like Maxes, Neos, good credits. I think that trend will just continue, and I think you're just going to see huge competition in that area for the future, but basically going forward. I think a lot of these investors like the fact that there's a real asset, there's an income stream, fairly predictable residual values on the mainstream aircraft. So I think it's kind of got quite commoditized. You know what I mean? It fits into a lot of different investors' portfolios, and I think that's here to stay.
Yeah, I think that's right. We've certainly seen that wall of liquidity come in and grow as well. Just skipping ahead, I wanted to talk about M&A, because obviously there's quite a lot of leasing platforms that were there before the crisis, and there's been a lot being set up during the crisis. I mean, that's obviously created a more competitive environment, but it's also perhaps kind of made it more susceptible to mergers and acquisitions. I just wondered kind of what your perspective were on the M&A front in terms of the leasing market. Do you expect
look, we've seen obviously that huge AirCap GCAS deal. We've seen various other decent sized lessors been kind of merged or taken over, and I think that ultimately that probably makes the world a little bit more. It's like, I guess, when all the big airlines in the US, suddenly there was only United, there was Continental, there was Delta, etc. It's only 4 or 5 airlines. But then I think what we've seen after that is that startups started happening and smaller airlines started building up again. So I could see a situation where, we've got some big sort of the big kind of mergers going on at the moment, but I think that you probably start seeing some smaller leasing companies starting up, which hopefully will bring more competition into the market again.
Absolutely. I mean, and they've got quite a lot of, like you say, this liquidity backing them. So just to move towards kind of financing of leasing companies, I mean, the capital markets have been used for investment grade lessors quite a lot, but kind of what about for the rest? I mean, how do you see the capital markets as a source of financing, and kind of where do you stand within that kind of environment?
Yeah, I mean, look, it depends on who you are and how big you are, but the unsecured market for the big boys like AirCap, and then I think you've got other groups who are taking advantage of the ABS market. That's definitely showing signs of recovery. So that's another strategy which I think some of my competitors are using. And then of course you've got the usual, which we've tended to use, which is basically deal specific, non-recourse financing with senior debt. We tend to put a lot of equity into our transactions, so we've a big sort of suite of banks who we generally can get our deals done fairly easily. But basically it's non-recourse financing, mostly in our case. we are looking at other structures, but at the moment we tend to look at cradle to grave. Like for example, we did Singapore Airlines A350s and 787s on one hand earlier this year, which we did with a very interesting Sukuk financing out of the Middle East. And then on the other hand, we bought, for example, 20 Q400s from a BFP from the Flybe bankruptcy, and we didn't put any debt on that one. So I think it very much depends on how you're set up and what you're trying to achieve.
Yeah. I mean, you touched on ABS there. I mean, the market really has rebounded strongly, and it's had perhaps a little bit more caveats and a bit more structural enhancements put in there. And I know that you've done one in the past, and you've just touched on it there. I just wondered whether or not it'd be something that you'd look more seriously at in the future.
Look, I'd never rule anything out. I mean, we did that more as a de-risking strategy in 2017. We kind of thought that the market was getting very kind of frothy, and people were talking about super cycles and that kind of stuff, and we just didn't buy into that. And we decided, look, we should start selling stuff down, and we found this an efficient way of doing that. I don't think we're particularly sort of a set, that's not really our strategy to be doing multiple ABSs. But on the other hand, if something changed or there was some reason we would do it, we have the experience of doing it. So, and I think, as you say, they're getting a little bit more hopefully user friendly. And there was always this thing about a little bit inflexible, the structures. I mean, trying to, for example, sell airplanes out of them because of the various covenants, just made trading a little bit more difficult. So, we like to trade, so it slightly went against what we do on a day-to-day basis in terms of we buy and we sell. So, and ABSs, we didn't think in the earlier structures lent itself too kindly to the trading side of it.
Yeah, absolutely. Can we just look at the actual aircraft assets? I mean, you mentioned that you've invested in wide bodies right down to Q400. So I was just wondering kind of what your expectations were for the demand for certain aircraft types, and whether that was kind of guiding your buying strategy.
I think it'd be fair to say we're very, in Aergo, we're more like a boutique. We're very opportunistic. We look for value, and how do we make money out of these sort of deals, rather than saying, well, we're pigeonholed in, say, one particular, for example, new Maxes or Neos. We found, because of the competition, we've had to look literally right across the board, and hence why we've done anything from new stuff we did this year to kind of mature stuff. So we to find a kind of a way of kind of getting a nice return, we've looked right across the whole spectrum, and typically it's ended up being your usual narrow bodies, NGs, COs, A320 COs. We've done some Maxes, we've done some in the narrow body sense. We found some decent value in some wide bodies. We did some stuff with I said earlier, with Singapore Airlines and Iberia this year. And then at the bottom end of the market, we've been buying quite a few turboprops. We've seen value there. I mean, the values went way down, and we just said, look, that's a good opportunity. So we bought around, I think, 40 turboprops this year, between Q400s and an ATR 72 600s. So again, look, it won't ever be much more than, say, around 20% of our fleet, but we just found some value there. So it tends to be like, how can we make money, rather than pigeonhole ourselves in any particular one aircraft type or sector.
Absolutely. I guess that strategy allows you to be more optimistic in this current environment.
And of course, the other main thing, of course, our shareholder Carval has been extremely flexible and supportive, of this particular strategy. So they're quite happy for us just to look right across the spectrum and invest as appropriate.
Well, that was going to be my next question in terms of the investors coming into the space. I mean, you've obviously had a long relationship with Carval, so kind of what they expect. How is that kind of comparing to the other investors that are coming into the space now? Are you seeing experienced investors that you're competing with, or are you attracting new capital that you've seen?
as you said earlier, Victoria, I mean, there's a wall of liquidity coming in from all angles in the market, whether it's at the top end of the market, the middle of the market. We're seeing some new people coming in, and even down on the the mature end. So really, the money is coming in from all angles, and it just depends on what people want to do with that money. So it is, as I said earlier, just making things pretty competitive almost in all areas.
Do you think it gives you an advantage though, having such strong backing over other people?
Absolutely a huge advantage, because say Carval will allow us to buy brand new airplanes down to older turboprops. So definitely it's a huge advantage.
Okay, and then do you see kind of return expectations being changed by investors throughout the crisis? Have they changed at all, or?
I mean, you would have thought that let's call it the returns would have improved, because with kind of with distress. But I've just been very surprised about just in certain aircraft types, the lack of distress. Ultimately, I think you saw a flurry of sale leasebacks, which have worked out very well for a lot of people. And I think it's been. I think it's just proven that the whole lessor strategies, just in general, have been very robust to get through this pandemic. But I think that certainly what we're seeing at the moment, notwithstanding this latest variant, is that returns are falling. They're getting tighter, and it's directly related to the amount of money coming into the sector.
I think that's right. I think at the end of all of these interviews we've been doing, we've been asking people how optimistic they are for the short-term, medium-term future. So I just wanted you to get your outlook for the future, Fred.
Well, I mean, obviously we just increased the fleet from 20 to nearly 200 over the last 18 months. So you've got to call me an optimist. But no, look, I fully believe we're going to come through this, and there's going to be a very good recovery, and I'd be definitely on the optimistic side. Although I do believe over the next 6 to 12 months it's going to be bumpy, and we're going to have all this stuff we're going through at the moment. In various parts of the world, whether it's restrictions or getting tests and all this kind of stuff. But I think it'll eventually, the world will get used to living with COVID, because it's never gone away. It's just a question of how we manage it.
I think that's absolutely correct. I mean, a huge growth over the last 2 years is definitely a testament to your optimism, Fred, and wealth management of the leasing company as well. So well done to you. And I just wanted to close up the interview by wishing you all the best for 2022. Well,
Victoria, we very much look forward to getting back into your conferences as well. It's a shame that Dublin was cancelled, but look, let's roll on to May, and we'll pick it up from there.
Absolutely. Thanks very much for your time.
Okay, thanks a million.